Hi, everyone. I'm Shay Rowell of the Rowell Realty Group at Keller Williams Vestavia. And of course, today I'm with my favorite guy, Andy Gagliano.
Yeah. Hello, Shay. How are you today?
I'm doing well. I'm a little bubbly today, if you can't tell.
That's good, though. I like it.
How are you?
I'm very well, thank you.
So, I think we've got kind of an explosive topic today. So, if you would like to do a market update, we can do a market update. If not, we can jump straight into this. It's kind of on you.
All right, so I'm going to give about a 5-second market update.
Okay.
Rates are improving,
Perfect. Perfect. Sounds
and if
good.
if somebody wants more information on that, they can call me. But because we do have a great topic to discuss, let's jump into that.
Yeah. So today we are going to talk about finances. We're going to talk about costs during the transaction. I want to kind of discuss the differences between the upfront out-of-pocket costs and closing costs.
Okay.
So let's start with, well, I'll just say this. A lot of times I have buyers to reach out and they want to know how much money do I need to buy a house? So Andy, how much money do they need to buy a house?
Shay, that
A
is
loaded
a
question. I'm sorry.
it is. That is such a simple, short question that is going to get such a long and can sometimes be confusing answer. So I'm going to sum it up into about three different parts.
Okay.
To buy a house, someone is going to need money up front for earnest money, for a
Mm-hmm.
home inspection if they choose to do that, for an appraisal,
Mm-hmm.
and for a credit report. And now there may be other inspections that you as the realtor recommend that they do that could cost them additional funds, like a sewer line inspection or radon inspection, things like that. Maybe even a survey if
Mm-hmm.
they have to pay that up front, just depending on the timing of when that's done. So there are those costs that are going to need to be paid. I'm going to say in cash, but really what we mean is paid up front in cash, credit, debit, however the buyer chooses to pay those costs. But that's going to be one set of cost for someone to pay in buying a home. Now, most of those services, most of those items are going to be credited back to the buyer when they go to closing. So, in other words, the appraisal. They're going to pay for that up front, but we have to show it on the closing disclosure at the closing table. So, we legally cannot charge someone more than what the cost of that service is, more than what the cost of that appraisal or that credit report is. So we can't double charge for that appraisal is what I'm saying. Legally, we cannot do that. So there, the buyer will get a credit for that appraisal at closing, and that would be applied towards their closing cost. All right, so that's the first group are the fees is that amount of money they need in or need to be prepared to pay up front. And those are other than the earnest money, those are things that a buyer needs to understand that if they pay for those things and the deal falls apart, that money is gone. They're the money for the appraisal, the money for the home inspection, the money for a radon inspection or a sewer line inspection, those funds are gone. They're spent if that deal falls apart. Now, earnest money, if the buyer's following the contract, that would be refunded to the buyer at that point that the contract's canceled. So there's that group of first expenses or first costs. Then we have the down payment. So the down payment can range from zero to whatever someone chooses to pay down. They if it's a $200,000 house and someone has $180,000 they want to pay for a down payment, and they're going to get a mortgage for 20,000, they can pay 90% down. So,
I do want to kind of interject here,
okay,
and just kind of clarify that when you say from 0 to whatever they want to pay, you mean like whatever they want to pay being the high side, not that when you're buying a house, you get to just choose what you want to pay. You can choose what you want to pay as long as it meets the requirements of the product.
correct. And
Okay.
the buyer's qualifications as
Right.
well. So in other words, if someone's a veteran and that veteran's going to get a VA loan, they can qualify with as little as zero down.
Right.
Or if someone's not a veteran, they're just a regular average Joe like me, but they want to buy a rural, I'm going to try to say it again without messing up,
I can't say it either.
a rural property, then they could get a USDA loan and possibly buy with 0% down payment
Mm.
there as well. So there are some down, and of course, we have a new conventional loan program that's a zero down payment program. And there are no income restrictions. There are no area restrictions on that product. So there are options available. Now, obviously, there's some criteria that has to be met for all of those programs as well. The credit scores have to fit within the guidelines and so on and so forth. So there are opportunities for someone to be able to put as little as zero down. But I'll give you a good example of a situation where the guidelines say that this buyer could put down less money than what they're having to put down
Mhm.
because for this loan program, it's an FHA loan program, but I have a buyer right now that I cannot get approved to put down only the minimum 3.5% down payment.
Mm.
But when I bump that down payment up to 5%, lo and behold, I can get them pre-approved. So, those
We're
kind of
gonna do a
things.
video on that because I want to know about that.
Yeah, it's now's an interesting time in the mortgage world. It really is. So there are situations like that, and that all ties back into a discussion you and I have had several times as to why a buyer needs to get pre-approved
Right.
before they get serious and go out and start looking at houses. Because, you know, if a buyer only has a 3.5% down payment, but yet we can't get them approved with 3.5% for an FHA loan, we can only get them approved with a 5% down payment. Well, there's another 1.5% of the sales price. And if you're talking a $200,000 house, there's 3 grand that
Right.
buyer's got to come up with. Where is that money coming from? So we can uncover these things when we do a pre-approval. And
Right.
so that's why those pre-approvals are extremely important for buyers, as you already know.
Right.
So,
But on the flip side, and kind of back to your point, just because the 3.5% is the minimum or the 5% or whatever they're approved for, if they have more to put down, they can always put more down if they so choose.
absolutely. And,
So can you
you
tell them
know,
the benefit of that?
yeah, so there's several benefits. Number one, the more they put down, the easier it is going to be generally to get them approved for a mortgage because that buyer has more skin in the game. They have more money in that transaction. And buyers, or I should say homeowners at that point in time, are less likely to walk away from a house that has a lot of equity in it. What they're more likely to do is to call Shay and say, "Hey, Shay, I'm having a hard time making my mortgage payments. I hate to do this, but I need to sell my home," because they may have 20, 50, $150,000 in equity in that home, and they're not just going to turn that property over to the mortgage company and lose that equity
Right.
most of the time. So that's one benefit. Another benefit is it lowers their payment.
Right.
Now, we get this a lot with buyers because there's just eh, ignorance is not a bad thing. It's not a bad word, and I'm going to use it now that I've given my little disclaimer here. But there's a lot of ignorance when it comes to the home buying process, and that's okay. That's why there are professionals out there like me and Shay who can help guide you and who are going to give you honest advice and honest answers to your questions. But a lot of people think, well, okay, I'm going to put down, let's just use a round number and say $10,000 for my down payment. And
Mhm.
we start the process with them putting down $10,000 for their down payment. They're pre-approved. We're moving along in the loan process, and the phone will ring. I'll answer, and they'll say, "Hey, I know I told you we were going to put down $10,000, but we have another $1,000 that we can apply towards our down payment, and that will make our down payment $11,000. How much will that reduce our payment?" And then I get to be the one who delivers the bad news. And the answer is that's probably only going to reduce your payment by about $6 to $7 a month.
Right.
So is it worth spending $1,000 that you could use to pay movers,
Mhm.
or an extra 1,000 that you could pay a painter to paint a couple of rooms in the house, maybe do some flooring repairs or things like that to the home? Is it worth putting it down on the loan, or is it worth using those funds to make that home more your own,
Right.
buying furniture instead of financing furniture, things like that? So that's when we have those tough discussions. But when someone says, "Hey, my grandmother's going to gift me $25,000 and I want to apply that towards my down payment," absolutely, yes, that's going to make a fairly significant difference in someone's monthly payment. So there's a second benefit to putting down more money. And then the third benefit is if we can get someone to where they're putting down on a conventional loan at least 20% of the sales price of the property or the appraisal, whichever's less, then they can avoid mortgage insurance. And that's going to help lower their monthly payment, their monthly
Mhm.
mortgage payment, by not having that mortgage insurance on the loan. And we can talk about mortgage insurance a little bit more, just to kind of clarify, because some people get mortgage insurance and the credit life insurance and homeowners insurance. They get those three things mixed up a little bit. They're not the same, they're totally different. But
Yeah.
we can talk about that in a different video because that can go on a
Okay.
good while. But yeah, so that is I would say those are the three primary benefits of putting more money down.
Okay.
So, and
So
you
you got
did
I'm sorry, go ahead.
you did what I always want you to do. You asked me a question instead of waiting until the very end to ask, but I've lost track now. Where were we on?
Yeah, I was literally about to round you back up.
Okay, thank you.
So we have our upfront costs, and we started into our closing costs. We've got the down payment, which we've now told them
Yeah.
is due at closing. It's not money that you have to pay up front. You pay this at closing. What else do we have in closing?
Okay. So we have closing costs and prepaid items.
Right.
Now, I think a great video topic for you and I to get into at a future date would be to really break down and itemize those closing costs and prepaid items, and
Definitely.
explain what the difference is between prepaid items and closing cost. Because what I do is I will lump together the two separate categories of closing cost and prepaid items. I'll lump those into one category and just call those closing costs when I'm having a discussion with a buyer.
Right.
So there are closing costs that need to be paid, there's down payment that needs to be paid, and then there's the upfront expenses that someone will have in order to even put a contract on a property and move through that due diligence part of that sales contract. And those, here's the thing, you asked a question that buyers ask you, and what they're looking for is, give me a number.
Yep.
Don't give me this category, and this category. Give me a number.
Me a number.
And
A goal.
yes, you know as well as I do, that number is going to change depending on sales price and, of course, down payment. It can change if someone wants to pay some discount points to buy an interest rate down to a lower rate, that can change this number as well. But what I'm going to do is I'm going to default to you, because you're the real estate expert, on earnest money, cost of a home inspection, cost of a sewer line inspection, cost of really all those due diligence inspections that generally are required. And then I'm going to we talked about the down payment
Right.
part, how much money that could end up being. But I'm going to go ahead and just answer, how much are those closing costs? So those closing costs can vary greatly. Just like I mentioned, a lot of it can be up to the buyer as to how much they want to pay, if they do want to pay discount points or don't want to pay discount points. But I'm going to go ahead and just throw the bad news out there. Closing costs today
Mhm.
are generally much higher than most buyers think they're going to be. And just to give a good ballpark number, let's say we're talking a $200,000 home where
Mhm.
someone's putting a minimum down payment of 3.5, 5% down payment. Those closing costs can be anywhere between $6,000 and $7,000. And as that sales price and loan amount increase, those closing costs can be even greater. And so, you know, when we get into the video where we're talking about the breakdown of the closing cost, we can really dive into this more. But things have gotten so expensive. And when I say things, those items that comprise the closing cost have gotten more expensive. Credit reports have gone up, appraisals have gone up, homeowners insurance has gone up, property taxes have gone up, the recording fees have gone up, attorney's fees have gone up. All these fees have increased in price. And oh, I'm probably going to get myself in trouble, but I'm going to say this anyway. I kind of giggled a little bit last week when the Consumer Financial Protection Bureau, or the CFPB, for the purpose of this video, let's call them the mortgage police. They came out last week and they said, hey, we're going to really launch an investigation into why closing costs have increased so much.
Mhm.
And that's great. I think their intent is good, because closing costs have increased greatly over the past even 5 or 6 years. But what the CFPB needs to do is, and the mortgage industry pointed this out to them very quickly. The mortgage industry said, hey, look in a mirror. You are why closing costs have gone up so much. It's because of the regulation that you've imposed on appraisers and credit bureaus and mortgage companies. And yes, we can't do anything about homeowners insurance, but these homeowners insurance companies are losing money like crazy. So I the fact that these closing costs have gone up so much is not lost on anyone. It's
Right.
something we see daily, and buyers, quite honestly, most of the time are shocked by what closing costs are on a transaction. And so it's good. One more reason why a buyer should get pre-approved and have that conversation with the mortgage loan officer. And during that conversation with the loan officer, say, can you send me an estimate of what your closing costs, or what you estimate the closing cost to be for a loan of this amount and a sales price of this amount?
Right.
So, all right. I think I've talked until I'm out of breath. Tell me about what a buyer can expect as far as earnest money and the inspection fees.
Okay. I did also want to add that buyers should also be aware that they need to also save for their agent commission fees.
It is true. That could be a fee that a
Yes,
buyer has to pay in the future. It could be.
yes. And I also wanted to mention, like, I know this sounds scary. It's a lot. Like, that was a lot. That was a whole lot. It was a lot
Yes.
of numbers, a lot of things to pay for, a lot of categories. But while most of this is not really negotiable because you're paying the attorney fee. You can choose the attorney, but you're paying their fee.
Yeah.
Um, depending on certain situations, you can have your closing costs paid for by the seller if that's something that could be negotiated. So that is possible.
So
So,
true.
but we always like for the buyers to be prepared. I'd rather you have it and not need it than to need it and not have it. And you can only choose a home where the seller is going to pay for your closing costs. But if that's the situation we're in, then that's the situation we're in.
Yes.
Um, do I did want to ask though, so if when you get that question, do you not give like a percentage or something? Because I used to give a percentage. I honestly can't remember what it was, but I used to give a percentage and say, um, it's a hard question to answer, but like X% of the expected cost of the home. So
Yeah. And that's still a good approach to
yeah,
take is, to give a percentage. And what I will usually do now is, and there's a big reason for that, and I'm going to use the Birmingham area as an example of this. And it's going to vary, or I should say, really, this principle is going to be the same whether we're talking about a property in Birmingham or a property in Huntsville or a property in Mobile or Montgomery, or I should say those metropolitan statistical areas. But if someone were looking at a home in Mountain Brook, Alabama, the property taxes could be for say a $600,000 house in Mountain Brook, the property taxes for that property can be 2 to 3 times what the taxes would be for a similarly priced property in, say, unincorporated Shelby County, Alabama, which,
right.
for those of you that don't know about Alabama, is a, a very popular area, but south of Birmingham, and it's more as you get further south in Shelby County, it's more rural, and the property taxes are less there. So for me to tell someone, hey, your closing cost will be 3.5% of the sales price of the home. And if you're talking a $200,000 home, you're talking $7,000 in closing cost, then it's, I have a hard time doing that because there are so many unknowns. So what I'll do is I'll give a range
Yeah,
of a percentage to say, bare bones, you'd be doing great to get a 3%. Your closing costs be 3% of the sales price of the home, but it could be as high as 4.5% of the
right.
sales price of the home. So yeah, that percentage is a good way just to get somebody's mind going in the right direction. And Shay, I know you do business this way as well. I always want to overestimate. I
I was
want to,
just about to say that.
yeah,
I'm always over.
yeah. I want to scare
I'd rather you be
someone
excited.
today
Yeah,
instead of scare them the day of closing, because the
yeah,
day of closing is not a good time for a surprise. So
right,
if Shay and I are preparing you for the worst today and we go to closing and we say, hey, we told you you were going to need $8,000 in closing costs, but your closing costs are seven,
right.
you've been prepared to pay eight, you're going to show up at closing and have a smile on your face instead of showing up very unhappy or maybe not even having the money to close it, to close the transaction. Maybe you don't have that extra $1,000.
Yeah.
So anyway, yeah, that
So
percentage is good.
that's typically what I do. I typically give them kind of a percentage for the entire thing because that's really what they want to know. They don't care about going into the weeds. They want to know like how much money should I be saving now or how much like is the amount of money I have enough? And again, it's hard to answer, which is why I always recommend having that conversation as soon as you know that you want to buy, even if you're not prepared to buy now. If I know I want to buy next year, I need to be having a conversation now so that I can, start moving in the right direction. Because again, I'd rather you be prepared than, it's time for you to buy and you have $2,000 expecting that to be your closing costs.
Yes. Yeah.
So, but then I also will just always tell them save as much as you can.
Yeah, and that's never a bad thing because you mentioned it just a minute ago. When someone goes into a real estate transaction, almost everything's negotiable.
Right,
Doesn't mean the seller is going to take your offer. Doesn't
right,
mean the seller's ever going to agree to what you want, but almost everything is negotiable. So someone can negotiate for the seller to pay some or all of their closing cost.
right,
So if someone says, "Hey, I've only got 2,000 for closing cost plus my money for down payment, or maybe I don't have down payment and I'm going to do 100% financing," then Shay can work hard to make that happen by getting the seller to pay all of your closing costs except for $2,000 worth.
right.
So yeah, don't think, well, it'll take me 3 or 4 years to save $7 or $8,000 for closing cost because that that can be worked out.
Right.
So, but yes, save, 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 save.
I think
And
ultimately, what we're both kind of dancing around is the what we say in pretty much all of our videos. This information is not set in stone. This is just kind of like the general how it works, but every situation is different, which is why a lot of people don't talk about it. It's kind of hard to get realtors to say how much money you need because it's personalized. And I don't think a lot of times I don't think buyers really understand that, but they shouldn't. They don't work in this industry.
true.
They just want to know how it works, and they just want to know how much money they need. And it sounds like a simple question that requires a simple answer, but it's not.
Yeah.
So we're
Yeah.
kind of giving the general, but there are things that can be done. There are negotiations that can be made. Different loan products require different things. Like it just kind of depends on what the situation is. But we like to prepare for worst case.
Very good summary for sure. So, what talk to me because I see, let's see a lot of sales contracts, obviously, because
Mhm.
we have to have a sales contract on every deal that comes in the door. And I see a wide range of earnest money deposits being paid. Is there kind of a general rule for what you're taught to ask a buyer to put down for earnest
So
money?
earnest money it's the buyer's choice. It's however much money the buyer wants to put down.
Okay.
That I'm gonna leave it there. It's
Period.
the buyer's choice.
Okay.
Yeah.
All right. So,
You can be strategic. I can tell you that, hey, if you want a stronger offer, we can, this would make it a stronger offer, but ultimately it's the buyer's decision.
okay. And so that, I guess, leads me to backtrack a little bit and ask, what is earnest money and what does a buyer do to possibly not get that money back?
Okay. Earnest money is a good faith deposit. This is the way I explain it to my clients. It's a good faith deposit that you are essentially putting up to say, hey, I want you to take your house off the market and go through this process and sell it to me. I'm gonna do everything that I'm supposed to do on my end. You're gonna do everything that you're supposed to do on your end. And when the deal closes, that earnest money is credited towards your closing costs.
Okay.
If the deal doesn't close, depending on why the deal doesn't close, will determine where that earnest money goes. It can go back to the buyer, typically goes back to the buyer, but it can also go to the seller, depending on why that contract fell through.
Okay. All right. And then for someone who is getting the seller to pay all of their closing costs
Mhm.
and also is doing a no down payment loan,
Mm.
where would earnest money go at that point in time?
I don't know. Would they get would the buyer get it back?
The buyer can absolutely get that back. Yep. I have been in VA closings
Yeah.
uh, for a loan for a veteran. I've been in those closings where the veteran shows up at closing without a check
Hmm.
or without a wire being sent to the attorney's office for funds to close. And they walk away with a check from the closing attorney for the earnest money that they paid into the transaction to start the sales process or the buying process. And they walk away with keys to the house.
Hmm.
So
Well,
literally pay $0 out of pocket to buy a home.
yeah, that does make sense. I've never had that, but I have been in closes with like grants where they got grant money or some
Right.
type of assistance, and they walked away with a check and
Right.
their keys. So
Yep.
that's nice. That's always nice.
Yeah. No doubt. Well, awesome.
I think, yeah, I think that was pretty much everything. I think we're gonna have to do another video to kind of deep dive. I think we discussed that we're probably gonna do a video to go a little bit more in depth where we can talk about those upfront costs and the range of what they typically are. And then we'll do one for the closing costs as well so that we can
Yeah.
educate a bit more on them.
Yeah. That would be good. The closing cost video could be a long one, but there's a lot to it. And, if we need to, we can break it down into two parts, but it's, it will be, I think, pretty eye opening for a lot of buyers to see
Yeah.
what goes into those closing costs. So it'll be good.
Well, that was good. I was trying to think of my roundup, but I feel like we kind of rounded it throughout.
I agree. I think you asked some great questions during the video, and I think that it all kind of speaks for itself. And I think you did round it out when you were talking about earnest money, and we talked about the transaction, you know, where someone can come to closing with no money.
Yeah.
So, it's a hard question to answer when someone says, "How much money am I going to need to buy a home?"
Yeah. I think my final thoughts would just be talk to a professional. Talk to a professional. Go ahead and get a pre-approval and just kind of see where you are. That would be my opinion.
Exclamation
If you're
point.
not, if you don't want to go that route, because I know we can say this all day, and then some people will still kind of be nervous or not want to come to you or call. So if you don't want to go that route, just start saving.
Yes. But it's still at some point in time that
You
buyer's
have
going to
to you
have
have
to
to
have a
talk. Yeah,
conversation.
yeah,
So
yeah.
why
But I'm
not
telling you,
call?
Andy, I talk with buyers. Sometimes they do not, sometimes they're not prepared to have the conversation yet.
Oh, yeah. Yeah.
So if you're not prepared to have the conversation, just go ahead and start saving.
Save every penny you can and then some. Flip those sofa cushions over. Start digging for change.
Or
Yeah.
Andy.
I'm not, it sounds like I'm making light of the situation, but I'm really not,
I
because
know.
literally it cut back. No, seriously, no trips to Starbucks, and just start cutting back on things and start socking money away, because you cannot have too much money.
Yeah.
I'm not saying that we're going to try to get it all. Shay and I are not going to try to get it all. We
Mhm.
want you to keep as much as you can, but it's better for you to have more than what you need, just
Yeah.
like she said. So awesome.
Thank you so much,
Well,
Andy.
thank you, Shay. I always enjoy this. So if someone wants to contact you and have that conversation to start out, how do they reach you?
You can call me at 205-567-9713. What about you?
205-979-4412, and I'm at extension 1.
And you can reach out to either one of us to speak to the other as well.
Yes.
We
And
can
we
get you
will
connected.
we will not be mean.
I don't know, Andy. That was random. Now I'm kinda thinking you
Well,
might.
it's that, and I understand it. I really do, because I have been in the business a long time, and I understand the reservations and hesitations that people have and the nervousness. I do really, truly understand that. But Shay and I will not kill you and eat you.
Yeah.
If you want to have a conversation with us, we're just going to shoot straight and answer your questions honestly
Mhm.
and give you the information that you need. And if you can't buy today because you're not financially ready, then you just can't buy today. It doesn't mean you're lesser of a person at
Mhm.
all.
If you
It just
can't,
means you're
we'll
not
give
ready
you a
today.
plan. Yeah.
Yeah,
If you can't, we'll just give you a plan so that you know what needs to happen so that you can be in a position to do it. I think the important thing is to just note that we are not here to judge you. Because
absolutely
I feel
not.
like that's kind of what it is for a lot of people. They feel like they're gonna be judged. We're not here to judge you. We're here to close deals.
Yeah, that is true. Awesome. Thank
All
you,
right.
Shay.
And I'll see you next week.
All
Or
right.
yeah.
I'm looking forward to it.
All
Have
right.
a
Thank
great
you.
week. All right. Bye.